Awesome. All right, hey guys, here we are. Welcome to the live stream. We're going to check out the open of crude oil. Today's Sunday, March 13th, 2022. And awesome. All right, hey, here we are with the live link. So I'm going to post this in the room. All right, so here we go. The open just happened, and you can see we opened lower. It's coming down to the bottom of that range. This is the range we've been chopping in. This is the 5-minute strat right here. This is the 15-minute. This is the 1 hour, and this is the 4 hour. And for the moment, I'm only looking at short-term time frames at the moment. But if I zoom out and look at the Elliott wave idea, what I'm speculating on is possible that this is the top of wave 3, this high at 130.50 from last Sunday. And then all week we spent in a corrective action. And it's possible that this is a wave 4 of whatever degree this wave 3 is. And there's a lot of questions about that right now in terms of Elliott wave. Like, which degree are we in? Is this really a 5 top or a 3? And that this hasn't even completed an A wave yet. An A wave down followed by a B wave bounce, and then a serious C wave lower. Which, in other words, this is a higher, larger degree wave 1 top. In which case, this may project considerably lower. Maybe as low as down to here, based on fibs. But if this is a wave 3 top, this could be a corrective action right here. A, B, C could be. It measures, this C wave is pretty nice, the way it measures down here to the 2618, and the way it bounced off of that level, and also overall where this terminated down here at 103.63 was absolutely in what could be considered wave 4 territory, which are these black fibs right here. One other thing about whether this is a wave 4 or not, if I use sort of a longer time frame to look at this and forget where I've put these, I've had a really difficult time counting crude. Measuring it is one thing, but labeling it with a proper count is kind of another. If you know what I'm saying, it's tricky. But I don't stop measuring stuff. So my point about whether this is a wave 4 or not, if you put the 1, 2 here where I've got it, if you put the 1, 2 there and you measure from there, then this wave 4 came back to within 10 cents of that 100 fib, which, from what I understand about standard impulses, that is typically where a wave 4 could hold. So you've got a couple of pieces of evidence. Maybe this is the bottom of wave 4 and that we've already started the next leg up for a wave 5. So what I like to do, though, that's Elliott wave. But let's look at strat. I mean, this is interesting because I've got it consolidating in this range, right? You put a box around price. It's not breaking out above the box. It's not breaking out below the box. What it's doing is it's chopping along inside the box. And so for additional clues, we can look at two things. We can look at, in addition to Elliott wave, for more clues, we can look at strat method and we can look at the John Carter squeeze method. So looking at the John Carter squeeze method, and I mentioned this on Friday, is we did come back down. And for those that were following me on Friday, I was saying my preference would be if this can continue to chop, hold this box and develop a 5-minute squeeze that could then fire to the long side, because you see at that time the 15-minute was just starting to form the last time I posted any analysis. And now the 15-minute throughout the rest of the session on Friday continued to print red dots. So in other words, the 15-minute is in a squeeze. The 5-minute is in a squeeze. And the 1 hour has been in a squeeze. So with these squeezes set, these are good clues only in the sense that whichever direction this thing chooses to go in. Okay? Once this squeeze fires in earnest, that's going to be like clue number 1. So and all it is a clue. But the interesting thing about the squeeze method is when you've got multiple squeezes lined up like this, they can fall like dominoes. So if this one triggers long, the 5-minute trigger, if it triggers long, and then the 15-minute can trigger long, and then if the 1 hour triggers long, well, that might be enough gas to start, that would support the idea that maybe wave 4 of whatever degree we're in is done. And I'll just hop over here real quick to the daily, which right now, and by the way, these are the longer time frames on this view. I've got the monthly, the weekly, the daily, and the 4 hour. But for the purposes of this conversation, I'm more interested in the daily. So let me isolate the daily chart. And so, okay, now let's talk about strat. Since I just talked about Elliott wave and then I talked about the squeeze method, let's talk about the strat. Again, this is just providing additional clues. So right now, we've got an inside candle on the daily. Well, of course we do, because it opened, today. It just opened and started the new candle for today just now. So it opened, it's an inside candle, which means Friday's candle, the high is 110.29 and the low on Friday's candle is 104.48. So currently we are inside of that candle, thus the terminology an inside candle. So the rule of thumb on the strat is if this candle right here that we're in today, if it makes a new high over Friday's high, gets above 110.29, this is going to be called a 2-2 reversal. Because right now what we're in is a 2-1-2 reversal to the downside. This is just strat speak. And for those of you who already understand strat, you'll know what I'm saying. This is a 2-1-2 bearish reversal in play up to Friday. But now we've got an inside candle. And this is the range. This gray box is the daily range. Now I've put that range over here on the lower time frame, so we always have the context in mind about where are we at in relation to what happened on Friday. And the reason that's important is that that's a very important clue. Now this is still in chop zone, right? It's in the chop zone. It's been chopping ever since it came down originally off of that high. It chopped around a little bit on Monday, right, into Tuesday. But then it really came down, right? And that felt like a crash. Some might call it a flash crash. But, that's kind of what a wave C is really about. It feels like a crash. And, I won't bother getting the micro, but you could argue this is a 1, 2, 3, and then there's a 4 inside of there, and then a final thrust down for a 5-wave down. So this could be an ABC 3-wave corrective move. But I know if we're in a diagonal, then what I'm saying, you have to discount it because diagonals are a little different. I'm kind of thinking of it in a micro basis, more of as an impulse with a standard correction, which may or may not be correct. So here we are looking at the same strat on the 5-minute, the rule. Now look, this is why I like strat. It's so simple. It's so simple. It's just strat, you just take it candle by candle. So what I like to do, and I'm mostly a scalper, I end up in a swing trade when I've scalped multiple contracts, and then it goes in my favor, I'll leave one on in that often, or two, or whatever my definition of risk is. Then you leave that on for a potential swing trade. But I'm always looking at the super short-term stuff, because when I'm dealing in futures, you got to be precise, as you know, if you've already been trading futures, or you run the risk of getting completely killed. Ask me how I know. So using the strat method, put a box around the last candle. Now in this case, that was a pretty big fake out 5-minute candle. And the way I view this action, whether it's right or wrong, I don't claim to be expert. I will just tell you from my own experience, the way I think of like that candle that just happened, that we just saw together, it's like people were getting long in here. The people were getting long, and they were putting their stops. They were moving up their stops. And then at the open, when this dropped down and it went below the bottom of the range, it's crazy, but sometimes I think it's like price knows what you're doing. And if you had your stop at the low right there, if you were trading in this range and being long, and you had your stop at the bottom of that range, or maybe you moved up your stops up into here, well, you all just got stopped out. And price still hasn't tipped its hand. Now, I will say that this 5-minute squeeze has technically fired to the downside, but what I've seen when you have volatility is the red dots, which is what delineates the squeeze, the presence of the squeeze. Those red dots can blink on and off when you got volatility. So like, for example, if this candle wants to come back up, like right now, if that candle moves up 20 cents, okay, 108.73. If this wants to suddenly pop up and go up to like 93 or more, I bet you this 5-minute squeeze gets the red dot back again. But, if it doesn't, look how much volatility this just took. The range of that 5-minute candle is almost 50 cents. It seemed like it was more than that. Is that only 50 cents? 109.74. Yeah, that's more like $2. That's a $2 candle. Yeah, that's a $2 candle, but it still didn't convincingly fire the squeeze. But I'll tell you this. Okay, here we're coming back down now. So the way I'm viewing this right now, if this wants to keep, look at this, it's coming down. If this wants to keep coming, okay, Strat is already saying this is a bearish reversal on the 5-minute. Okay, let me turn the Strat thing back on this time frame. I turn them on, I turn them off because it can get messy. But I'm going to turn it on just for the sake of education and my own clarity here. So basically, you've got the risk here of this not being, it's too early to really say, but it's possible if this wants to fire lower. Clearly the pressure is down. I'm talking micro, right? Because that's all we got. The market's only been open 12 minutes. And, it made a giant $2 outside candle, right? Then it printed an inside candle, and the way the strat works is your short entry. Now I'm not going to give you an entry in the past, but if you want to be short, there's an entry. Sorry, it's moving so fast, but and if you're following strat, now I'm not trading this right now because I'm going to let it do some things first. I'm not going to trade this, but if you wanted to trade short, that would be your entry. And you know what I do sometimes is I'll put the bar there as that is the short entry per strat. But if it comes back up, let's say I missed it, right? And let's say I want to be short, I'll let it come back up. Because the idea with strat is once it's broken that low, that is the short signal. So if it came back up above that, you don't have to do anything just because strat is telling you that's the short signal. And, I'm not convinced yet what this thing is going to do. But from the looks of it, the pressure is down. The market's been open 13 minutes. So if you wanted to be short, it gave you another chance to get a better entry. And it still may. For all I know, this could come up in reverse, put that red dot back. See how the red dot's gone on the 5-minute? So technically, The 5 minute has fired short, but am I going to take a giant swing position on a 5 minute candle chart? Nope. But these are just the first clues. Okay, so let's say you had technically the short signal is 107.91, and sometimes I know maybe I'm a bit degenerate, but sometimes I'll just hop down to like the 3 minute candle just to see a little more detail and to give me a little more options. See, and look on the 3 minute, you did have a squeeze, but that is clearly fired short on the 3 minute. But the 3 minute is just, that's a little too much. I think 5 minute is reasonable. Although when it's moving fast, the shorter time frames, if you're a scalper, sometimes I am on a 3 minute or even a 1 minute if it's really moving. Okay, so the pressure remains down. This is your short signal, and per strat, technically the way the strat method is working is you trigger your entry. In this case, it's a short entry. You have an outside candle, then it printed an inside candle. Now, it was moving so fast I didn't even get a chance to say it, but this is another short entry, is the bottom of the inside candle. When that next candle broke that level, the strat method, that is a short entry. But again, this is a 5 minute chart we're talking about. So, I'll take an entry off a 5 minute chart if I have some other kind of information or some other bias. But I'd rather let it prove itself at least a little bit first. But that was a good short entry signal, certainly for a scalp. This is a great scalp signal to be short, but the thing is, it moves so fast. And the target, by the way, for this short entry at 108.65 is the bottom of this outside candle. So that target already got hit. So had I been, instead of me talking and making a video for you, had I just been focused on trading, it's possible I would have caught that. And if you've been following me, I catch things like that. So, the less exciting entry is as soon as it breaks the outside candle. That's an entry of sorts. But the issue there is, you see, there was an inside candle in between. So strat, you're really playing it candle by candle. So, without muddying this analysis with showing you things in the past, which is good for education. If you want to be short, now this is another inside candle. So let's see. I'm only going to stay on for just a few more minutes here. But the idea is, at the moment, the 5 minute chart is leaning lower, clearly, not just because the price is showing you that it's leaning lower, but you've got this squeeze here, and at the moment it is fired lower. So if you want to be short, now I also if you want to be short at the moment, a short entry, I'll just stay with you until this next candle prints. Maybe I'll stay with you for 7 more minutes. So always use a timer. If you're really going to get exact, you got to use a timer so you can know when the next candle's coming up, and it works on all time frames. But so the bottom of this inside candle is the next short entry per strat. If you're using strat, that would be your short entry. I'm tempted to take. I'd be tempted to take that trade, but there's going to be plenty of opportunity to take a trade, so I'm not in a hurry. And really, in order to be short here per strat, what I'd want to see is the next candle. The next candle print an inside candle. So you got 1 minute and 30 seconds left of this candle. And the short entry would be, if that next candle prints as an inside candle and then it breaks 108, you would put your short order at 107.99. See, but look, if it's going to come down below that, look, it just did. It just made a new low on that particular candle. So if you want to play it totally by the book, you just move it down. You keep, right? So now your short entry would be, and by the way, I always make it one, if I'm going short, I make the entry 1 penny below the exact reading. So 107.98, the short order in my brokerage would be 107.97. Because too many times it can come down to the penny and then bounce around and doesn't come down, where I don't want to be short exactly at 107.98 for the 5% of the time that it's going to touch it exactly, and then reverse and go up and you're short and it's ripping your face off. Just something I've observed over time. All right, so here comes the new candle on the 5-minute chart. Watch this. It's going to print an inside candle, obviously. There it is. So now, just as I drew a box around that range, which, technically, let's just move that down, because this is the range of the day so far. And if you want to be short, I think the pressure is lower, but I could be wrong. But look at the squeeze. So now it's just a 5-minute squeeze, but let's see where this candle is. So, at this moment, I have a bit of a bias for this to go short, only because of what I'm seeing on that squeeze thing. And also the price action. Look at the price action. It opened with a wild oscillation. I mean, on the 5-minute, it would be considered wild. It's not really that wild. So the price is already showing you that it has an inclination to go lower, right? I mean, you tell me. You see, this is the range it was in basically all Friday afternoon. And then now we've opened on Sunday night, and now the range has shifted lower a bit. And price has been bouncing around. I mean, look at those wicks. It couldn't get lower, so it came back up. It couldn't get lower here. It came back up. But, it can keep doing that and keep going lower. It can grind lower. And look at the 5-minute squeeze. Now, it's not 100% dependable. It's just an indicator like anything else, the squeeze tool. All right? So who knows what this is going to do, but this is the kind of stuff that I watch, and I just wanted to share, make the video to share with you guys. And I'll post this live video in the thread as soon as I'm done here, which will be just in a couple more minutes. It's just candle by candle. That's why I love the strat. Okay, and last thing, let's go back and look at the daily. Because you see, one of the hallmarks of an inside candle is chop. So after we had this, I don't know if you remember, but last Friday it was chopping. Sorry, I guess that was here. And then we had that massive move up. When you get the inside candle, that's where the chop is. It's inside candle. It's not made up its mind on direction yet, so it's just chopping. Now on Friday, it did break the low of this inside candle. So if you had used, I'm not using a daily chart to take my entry signals from. And this is why, technically on Friday, we did make a new low, right? So the strat method, this is the 212 bearish reversal, because right there we made a new low, right? We broke that. So some folks would just short that, and then you put the stop at the top of this. Well, that's ridiculous. I'm not going to do that, right? That's a $10 stop. So I'm not using the entry. I'm not using a daily chart for an entry, but it's absolutely informative to look at the daily chart in terms of strat. So now what we're doing is just keeping one eyeball on this for context, as I was saying. So that's why I like to put the daily levels even on my 5-minute chart. And that's the daily level right there. Okay, boom, it's coming back down. Trying to come back down. Let's see where that hit. So the low of that previous candle is 107.98. The low of this candle is 108. So it still hasn't decided. In other words, this is still an inside candle. I know this is minutia, but if you want to trade futures, the more exacting you can be, the better. At least that's my account says to do that. So, you would, if you wanted to be short, you would already have an order at 107.97 to sell. And the reason I might be thinking that is because of the 5-minute squeeze. Technically, it's fired lower. You got 3 periods. That's 15 minutes of downward momentum as expressed by the histogram on this squeeze tool. So, it's only a 5-minute candle, but hey, down is down. Even though it's just on the 5-minute. Okay, boom. There you go. So you would have just triggered short. Now here's where Strat, I know I'm getting long in the tooth here on this video, but here's why the Strat is so cool. It's so simple. So now if you're short, right? If you're short 107.97, you're going to put your stop at the top of that candle. Now this may seem wide, but I don't know. I think that's reasonable. I would do that. I'm just kind of focused on the video right now instead of trading, but I would make that my stop. So that's what, 28 cents stop. So it's whatever, $290 per contract. So if you had multiple, maybe you just want to keep it small, whatever, because of the uncertainty. So I always use at least 2 contracts, at least, to give me some optionality. So at this moment, we would be short 107.97 with a stop up there. And then per Strat method, if we're lucky enough that this can come down here and break this range, sometimes I'll make my stop break even. I want to give the position a chance, right? But I don't want to risk more than I would need to. Isn't that, I guess that's obvious. Do I need to say that? So it's a game, right? When do you move your stop? Well, depends how aggressive you are. So I'm liking this action if I'm short. For the moment, this can totally reverse and bobble around because we are still in a chop zone. So meaning this whole box right here is just, price has already proven that it's chopping. It's going down, it's going up, it's going down, it's going up, it's going down, it's going up, now it's going down. So, the squeeze is your friend because it's a clue. That's all it is. It's like the only reason I was suggesting to be short is because of what was going on in this squeeze tool. Okay, so now you're coming down short. All right, so now if it can break this range, that would be good for shorts. This is so micro. It borderlines on ridiculous. But, if you're in futures, this is how you do it, I think. So, okay, bam. So now you're short. I should really be trading instead of talking, but I'm kind of enjoying this as well. So, what I would probably do now, it'd be nice to let the other candle, just try to be patient and not touch anything yet. Although, you know what I would do now, because of how herky-jerky this is? Because it could totally come back up. It really could. And still retain this short setup. Do I want to take heat? That's what I'm asking myself right now. If I'm short 107.97, do I want to allow it? Do I want to take heat? Because even though I believe the pressure's lower, it's kind of going lower haltingly. You know what I mean? Based on these wicks. It goes down, then it creeps back up, and then it consolidates for 5 minutes. Then it goes down, then it creeps back up and consolidates for 5 minutes. Then it goes down, and it's creeping back up. Are you going to get another inside candle? See, the bearish candle, inside candle, bearish candle, inside candle, bearish candle, bearish candle. So in strat speak, we have a 2-2 bearish. This is a 2-1-2 reversal or continuation, really. This is a 2, that's a 1, this is a 2, and now we have another 2. So I think Strat would call this a 2-2 continuation, which is exactly what you want to see if you're short. So what I'm going to do is move the stop now to break even. Short, break even, stop. Okay. I'm just sharing like what I would do based on how I trade. That's how I'm just sharing like stream of consciousness. This is how I do it. And wrong or right, or you like it, you don't like it, this is how it works. Okay, so now you've got a nice stop, break even, right? You're up, whatever, 40, however many cents that is. That's 50, 60 cents. So you're up 60 cents. You're up $600 per contract. You could just stop right now. You put on two, depending on how you are, your definition of risk. If you had 2 contracts on, just call it $1,200 and you're done for the day. Bye-bye. Nothing wrong with that. I've been doing that lately. Take gains quickly in this environment. Okay, so, I mean, I could keep going because things are kind of working, right? So then, honestly, what I would do then, I start kind of, sometimes I do this. I'll start looking at the 15-minute to get a better idea of stop, because the 5-minute is going to be noisy. Even if this continues lower, there'll be a point at which it's going to come back. Of course, it's going to come back. And so I don't necessarily want to keep now this is where a scalp can turn into a swing. And the way I do that, it's all about the stops, because that's really what's going to differentiate a scalp trade from a swing trade, in my mind, is where's your stop? So let's just say I had 2 contracts on, and so I'm going to keep one of them at break even, but I'm going to move the other one down based on the 5-minute strat, okay? So I'm not even going to bother putting the stop there because it's only a few cents. Okay, this is really cool how this is playing out. And I honestly did not have a bias when the market opened. And this could still be a wave 4. It still could be. It's just a chop zone, and so it's chopping. So when you're in a chop zone, you try to short near the top of the box and you try to buy it near the bottom of the box, in general. But I don't know if I'd be trying to buy the bottom of this box. I don't know, based on the way this is opening and how it's just sort of leaking lower. And I don't want to move the stop down yet. I kind of interrupted myself with my ramblings, but the idea would be, let's say whatever amount of contracts you had, if you want to lock in your gains on half, there's nothing wrong with taking the gains. The thing that gives me pause about taking gains too quickly is this thing is just fired, really. And the rule of thumb about the strat, it's a very loose rule of thumb, is 5 to 7 periods of directional price action once the squeeze fires. So you've got 5 bars of directional price action after the squeeze fired. So for a scalp, this is great. This is a fantastic short scalp. By my definition, anyway. I mean, you guys trade $1 million accounts. Maybe this is a flea. This is nothing. But for a guy like me, this is fantastic. Had I been trading it instead of talking. Okay, this video is already too long. I went on because it kept moving, and I just wanted to keep talking about kind of what I'm thinking about, and also to get some feedback from you guys too. Okay, so now the 15-minute squeeze, check this out, right? So the 15-minute technically is fired short. So that is why I wouldn't necessarily want a tight stop, because it can come back up right now, even though it's going down right now. It can come back up right now and not damage this setup. So I wouldn't necessarily want to move my stop down prematurely just to get stopped out with smaller gains and then have it just continue. How many times has that happened to you, where you get stopped out and then it goes exactly where you thought it was going? So it's kind of like a game of cat and mouse between the market and your stop. So what I want to do, I mean, what I want to see happen is actually happening. This is ideally what I wanted to see. But once I started thinking about being short, ideally what will happen is the next bar, it's going to start as an inside bar, but the next, in 30 seconds, you're going to get another inside. Well, maybe not. It depends. Likely an inside bar. And so at that time, when that happens, if you want to just say, you know what, I just want to take some gains, you can take gains at 107.33. And again, make the stop 1 penny higher than the candle. Okay? Because it can come back up to the penny and then continue down. So you don't want to get stopped by a freaking penny. Ask me how I know. Okay, so now we have a new bar. And what would be fantastic is if it, obviously if it just continues. Because in Strat Talk, this is a 2-2-2. If this breaks a low, that's going to be 4 twos in a row. I think they call that a Randy Jackson continuation. I don't know where they get the names from. Just Randy Jackson just makes me laugh. Okay, so you got an inside candle, right? You had this 2-1-2 bearish reversal, which was the clue. That was the first clue with a squeeze present. Okay, now you got an inside candle. So now, I'd be saying I'm taking half off at the top of that candle. I'm going to take gains. Take gains on half at that candle. Okay. It's up to you though. If you have conviction, then you would just leave. And I do this. Leave the stop at break even for probably a lot longer than some would. Because if I'm thinking I want to give it room to breathe. And by the way, on any time frame, it's rare to see more than like 6 of these in a row. It can happen. It definitely happens. But I'm just saying, in general, price doesn't move in a straight line. So even if the downtrend, micro downtrend that we have here, it can remain intact, and this squeeze situation can remain intact, but it can come back up. And in fact, now that the 5-minute has given you 6 periods of directional action, I would expect this to come back up now. I'm not saying it will. Maybe expect isn't the right word. I will not be surprised if this comes back up right now. Just because it's given up a pretty decent move, squeeze or no squeeze, after a decent move, price tends to at least consolidate. And I know this is only a 5-minute chart. Okay, I think I've talked enough. That's it. So, and the thing about the strat that's so cool is each candle on whatever time frame you're trading is kind of giving you a new day. But you got to keep Elliott Wave in mind in the background to help you form a bias or to form your thesis. So right now, this is just micro stuff. And if you're short, you're happy. For a scalp, at least. Okay, so now it's coming back up. Let me just end the video because now I'm just getting into babbling. But, you would take off the gains there, call it 60 cents. And if you took half off there at 60 cents and then leave your stop at break even on the other half, because, it would not surprise me at all for price to come back up. Now, let's see. Okay, yeah, I think it did did it break that? 10. Oh, yeah, sure it did. Okay, bam. So, you would have just taken gains on half, right? So you just made 60 cents, let's say. And then now you're leaving the remainder on a break-even stop at 107.97. So the 5-minute, may need to digest that initial move down. That would be totally reasonable. And, what I like to do is just keep an eye on the overall range. So if I move that down, now you have basically what is equivalent to the daily range. That's today's range. And it's bouncing a little bit. It's coming back up. So the idea would be on the 15-minute squeeze. And by the way, I would take an entry again. I would if I were inclined. So you just play the candle. So this is a bounce. It's coming back up. It's got 30 more seconds before the next candle gets formed. See how far this wants to bounce. And, I know I'm talking a lot here. Just kind of stream of consciousness a little bit. But what I like to do is measure the range and put a 50% fib on it. And I always like to use the same exact color for this particular measurement, just so whenever I see it, I just instantly know what it is. And then I'll move this over. 106.51. 106.51. Reason is, in general, just as another clue, if the price cannot come back up and get above the 50% of the range, that bodes well for this to continue, the short trade to continue to work. But as I say that, you have to remember, we're just still in this chop range. We're still in the same chop fest that started on Friday morning. So let's see, the high of that candle is 107.62. The high of that candle is also 107.62. So this is a good example of, had you said, all right, when this new candle prints, I'm going to put my stop. This is what strat rules say to do. Put the stop at the preceding whatever time frame you're trading. Put the stop at the top of that preceding candle. Well, had you put your stop exactly at the top of that preceding candle, you would have just got stopped out, which might be fine. But just put it 1 penny above there. Because if this continues lower from here, it would suck to have to, wait and put another, chase it, in other words. All right, I think I've gone on quite long enough. So I hope you enjoyed this, if anybody's watching. And I'll post this video once it's processed. Okay, sorry. Last thing, I forgot to mention targets. Strat is great for targets. So the targets, if it comes down and it can get through this basic region, these are your targets. And sometimes I'll use multiple contracts and just put the order in to take them off. Put the stops and use OCO orders. Put your stop order in. Put the limit. Cover your shorts at these targets. There's a lot of ways to skin this cat, but I love the strat because it gives you targets too. And I've got targets in both directions because I don't know what's going to happen. As long as it's still in this range, Friday's range is the next big clue. Maybe I shouldn't even say big, because I suppose it could still be a wave 4 if it only comes down a little lower. Although I think it's much less likely that this is a wave 4 if it wants to come down and start breaking this low and get down into here. I think it's less likely. See, because the problem is, now I'm just talking too much, but you see, if that's a 3 and this is a 4 already, which did measure as a 4, and then this is a 5, it's possible that you have a 1-2 setup to the downside. That's Elliott wave talk, right? So we don't know. We don't know anything for certain. There is no certainty, but, the price action is, I wouldn't describe it as bullish. Now, this is a much better example. You put your stop 1 penny above there, or you would have just gotten stopped and then you would have been pissed. and then you go, oh, damn it, it's going, okay, I'm going to short it. So you chase it and you short it down here, and then it comes back up again. And then you go, damn it, it's coming back up. Let me get out of my short. So you can lose a ton of money dealing with things without some rules. And that's why I love the strat, is because it's giving you rules. Now, as I was just saying, the 5 minute could come back up and not harm the setup. And it's possible that that's what's happening. I'm not saying it is that's what's happening. I'm saying it's possible that that's what's happening, where we're totally in a downtrend. I mean, it's only 45 minutes long, but you're in a downtrend and it got a bounce. But look at the histogram on the 5 minute. The histogram is just coming down. At some point, this would need to reset or get embedded. Those are your choices. Yeah, man, this is looking good for a short. You know, you got a little bit of momentum going now. A little bit of momentum on the 15 minute. Of course, it's only been 3 periods on the 15 minute, but you got the histogram is expanding. And on the 1 hour, naturally, look at the 1 hour. This is a giant outside candle on the 1 hour. You got 15 minutes left. I didn't really talk about the 1 hour, but this is the one that's really going to drive. So, in my opinion, I could be wrong, but in my opinion, the 1 hour squeeze is the one that's going to really tell you what's happening. So the longest time frames that I'm viewing right now for this kind of action, I'm looking at the daily, and then I'm looking at the 1 hour, which is really going to be telling when the next in 15 minutes, when the next 1 hour candle prints, as long as it doesn't come up here and make a new high, as long as that 1 hour candle comes down and breaks the low again, and you've got another 1 hour candle red, this is going to be a bearish reversal. So this is already called a 3 bearish reversal per strat because you had 2 outside candles in a row. So this would be a 3-2 bearish continuation. If the next 1 hour candle makes a new low, it's going to say 3-2 bearish continuation. So 4 hours bearish, 1 hour's bearish, everything else is bearish. It's bearish. Okay, man, I should run now. All right, you guys, thanks for watching, and we'll be back at another point in time with some more analysis. Cheers.